Hi, today we're going to be looking at trading billionaire Linda Raschke's technical trading tips. She's a former hedge fund manager, billionaire, and has over 30 years experience in the trading world. These tips come straight from the book The New Market Wizards by Jack D. Schwager. This is a national best-selling book where Schwager has conversations with America's top traders, and so we're going to be seeing the tips from Linda now. The first tip from Linda is to buy the first pullback after a new high and to sell the first rally after a new low. Tip number 2. Afternoon strength or weakness should have follow through the next day. Tip number 3. The best trading reversals occur in the morning, not the afternoon. Tip number 4. The larger the market gaps, the greater the odds of continuation and a trend. Tip number 5. The way the market trades around the previous day's high or low is a good indicator of the market's technical strength or weakness. Tip number 6. The previous day's high and low are two very important pivot points, for this was the definite point where buyers or sellers came in the day before. Look for the market to either test and reverse off these points or push through and show signs of continuation. Tip number 7. The last hour often tells the truth about how strong a trend truly is. Smart money shows their hand in the last hour, continuing to mark positions in their favor. As long as a market is having consecutive strong closes, look for uptrend to continue. The uptrend is most likely to end when there is a morning rally first, followed by a weak close. Tip number 8. High volume on the close implies continuation the next morning in the direction of the last half hour. In a strongly trending market, look for resumption of the trend in the last hour. Tip number 9. The first hour's range establishes the framework for the rest of the trading day. Tip number 10. A greater percentage of the day's range occurs in the first hour than was the case in the past, and thus it has become increasingly important to trade aggressively if there are early signs of a strong trend for the day. Tip number 11. There are 4 basic principles of price behavior which have held up over time. Principle 1. A trend has a higher probability of continuation than reversal. Principle 2. Momentum precedes price. Principle 3. Trends end in a climax. Principle 4. The market alternates between range expansion and range contraction. These principles can be modeled and quantified and hold true for all times, frames, and all markets. The majority of patterns or systems that have a demonstrable edge are based on one of these 4 enduring principles of price behavior. And Charles Dow was one of the first to touch on these in his writing. Tip number 12. No one knows what will happen in the future. In the world of money, which is a world shaped by human behavior, no one has the foggiest notion of what will happen in the future. Mark that word, nobody. Thus, a successful trader does not base moves on what supposedly will happen, but reacts instead to what does happen. I hope if you found this video useful, you would consider liking it and also subscribing. Thank you.